Hey guys, Eric here, Mr. Fired Up Wealth. I have another IPO to share with you today. This one is in the SaaS technology, but it's interesting because it's in property and casualty insurance and InsurTech. You're going to want to see this one. I know a lot about this industry. Stay tuned. All right, so what is up, guys? Duck Creek Technologies. Say that 5 times really fast. SaaS IPO, it's coming out here in a few days. Really interesting. You want to check this video out because just had an update here recently in the last couple of hours, and some things have changed. So you're going to want to see that if you've been following this IPO at all. Let's first kind of look at Duck Creek Technologies, get a background of what they do, who they are. So they're based out of Boston, Massachusetts, and they were founded to develop an online platform that provides P&C, its property and casualty insurance carriers. So when you think of carriers, you're thinking, Geico and Aflac and all those. It's software for carriers that improves their operational efficiency for policy administration, for claims management, for billing functions, and they have smart artificial intelligence and some other things in there. So let's look at their website real quick here. This is just duckcreek.com. Introducing Duck Creek Producer. You can see they've got the About Us, Our People, Careers. I'm most interested here in the products. So they have the Duck Creek Suite, and it includes policy, rating, billing, claims, insights, digital engagement, distribution management, reinsurance management, and industry content there. So the Duck Creek On Demand, this is going to be your SaaS. Running core systems is hard. Our SaaS solution makes it easy. To stay ahead, their competitors, carriers need to innovate faster and differentiate, whether by creating new business models, launching new products, expanding into new regions, etc. So this is really their premier product that they're pushing now, their SaaS product. Like a lot of companies and some of their competitors that we'll talk about here in a few minutes, these guys did more of the legacy on-prem type software, and they've kind of graduated into a software as a service model, recurring revenue, subscription licensing. That's what investors usually like to see. So this IPO is going to get a lot of hype. Of course, it's not a very well-known company. It's not in a very well-known industry, so you may or may not have heard of it, but it is interesting, and there are some competitors that I'll talk about later, but it's not flooded with competitors like some other industries. So here it goes through some of the benefits, what you'll get, end-to-end support. So faster upgrades, end-to-end support, third-party integration. So with the cloud, they're going to talk about how they can do upgrades, more seamlessly, that your team doesn't have to spend months trying to update the software. They allow the end-to-end software support, and then third-party integration. So when you have APIs and plugins and things like that, so other software vendors can plug into your system. It also reduces implementation timeline and risk. So the on-prem legacy implementations could take years. You think of like an SAP. I've heard war stories from General Mills and some of those older legacy type companies that have been on software forever, that it took years and years to implement SAP, and it's a behemoth to manage. So this is more of the SaaS agile type software. It's scalable. They talk about security and privacy, kind of the same tag words if you've been following my channel. So some key facts. So the CEO is interesting. His name is Michael Jackowski, and he was actually with the firm here, Duck Creek Technologies, since August 2016. Previously, he was a managing partner at Accenture. If you're familiar with Accenture, they're one of the largest consulting type firms, and they do taxes and things like that as well. But you think of Accenture, they do a lot of consulting for cloud implementations, lots of different software from Oracle to IBM to everything in between. He's also held several positions at Allstate Insurance. So, Allstate, you're in good hands with Allstate, right? Fun fact. So with Allstate, the guy that does the voice, he's got that really defined voice. I was at a 49ers game back when they played at Candlestick Park, and it was Jerry Rice when he actually retired his jersey. It was against the New Orleans Saints, and I sat right behind this guy that does the Allstate voice, so that was kind of cool. So anyway, I digress. Duck Creek enhances claims decisions with AI, as mentioned earlier, artificial intelligence. There's a lot of hype around AI. If you watch my Lemonade video, same kind of thing with chat bots and using artificial intelligence to make decisions versus humans that used to, basically do all the decisions for claims and adjustments. These companies are going more to artificial intelligence to make those decisions faster and supposedly more effective than humans can do it. So has more than 150 insurance company clients worldwide, including the top 5 North American carriers. And, there's some asterisks on that, and I'm going to get more to this later in the video. But the reason there's asterisks is because a lot of the bigger companies will actually use part of, say, Duck Creek Technologies for one piece of the business, but then they'll use something like Guidewire for the other and kind of mix and match. And if you think about most enterprise large companies, that's very common. You'll see people that use Oracle database, and they'll have, lots of different platforms and products within the organization. So they could be using, ServiceNow. They could be using a combination of IBM with Oracle, with, Salesforce, with all these different products that are kind of working as one efficient machine for an organization. And you'll see that with the property and casualty industry as well, where a client will use part of one company and part of another and mix and match what they consider best of breed, perhaps. Most of their net new bookings are SaaS subscriptions. It's very similar with most software companies. Even if you look like a legacy like Oracle, which isn't in the same industry, but Oracle does software, of course. They were all legacy, on-prem, PeopleSoft, e-Business Suite, JD Edwards, and now they're pushing their SaaS platform. And that's, they're incentivizing their salespeople. That's just the trend. That's what everybody wants, is that subscription, that recurring revenue base, those ongoing revenue streams. So you're seeing these guys too. They're focused solely really at this point on selling their SaaS subscriptions, and they call that the Duck Creek on-demand system. So some more key facts about Duck Creek. So DCT is the ticker, by the way. It's going to be DCT. It's going to start trading this Friday. So today is August 12th, and it should be available on August 14th. So keep an eye out for that. Now, based on the rule of 40, if you're familiar, I've got a video on the channel that talks about how to evaluate software growth type companies. One way is the rule of 40. There's also the grit score. When you look at the rule of 40, it's kind of a rule of thumb that says, as long as the combined revenue growth rate and the net profit margin is 40% or greater, that they have a good chance of doing well in the future. Well, Duck Creek Technologies' most recent calculation was only about 20%, using the 9 months ended May 31st, 2020, of course, from the S1. So now the reason for that, I have note, is you'll see, I mentioned earlier, a lot of these companies are switching from that on-prem to that SaaS model. And so there are some expenses in that. And so it can impact the net profit margin. It also takes some time to get that ball rolling. If you look at Adobe, when they first started doing it, they actually struggled for a little while, and now it's a profit machine. So, I guess take that with a grain of salt that they're only at 20%. But if you are going to invest in a company like this, you might look at it and say, well, I feel like they're going to get to that rule of 40 very quickly based on some of the things they're doing. For example, the IPO, which I'll talk about here in a couple of slides. The reason that they're doing the IPO in the first place is to raise more capital to help with their expansion plans. So that could lead to more growth and get them possibly to that rule of 40 number. The net dollar retention is 118%, 113% for the 9 months ended May 31st, 2019, 2020, respectively. So anything over 100% is, of course, positive. It indicates the company is generating more revenue from the same group of customers, or a negative net churn. So that's actually a really good number. So what's the opportunity for a company like DCT? So the total addressable market, or the TAM, so there's a company called Mordor Intelligence, and I'm going to show you a chart here in a second, so stay tuned. In 2019, they reported that the global market for Insurtech, and that's a word that's misused. There's a lot of companies that fall into Insurtech that do a lot of different things, and I will talk more about that in a minute. So they predict that Insurtech, again, which is a wide category, that software and services are expected to grow from about $5.5 billion in 2019 to about $10.14 billion in 2025, or close to double in about 5-6 years. That's a compound annual growth rate. If you're not familiar, they call it a CAGR of 10.8%. So that's an annual growth rate of about 11% from 2019 to 2025. So not blowing the doors off, but definitely some solid growth. There's money going into sectors like this. The primary drivers for anticipated growth is they need to increase efficiencies through automation as well as improve their technological offerings. So that's why we think that they're going to, have anticipated growth. And the sector does show consistent annual growth. I'll show you a chart here. Annual investments in Insurtech in US dollars. This is 2014 to 2019 for Mordor Intelligence. And you'll see a gradual, in fact, it's not even gradual. You see a dip from 2015 to 2016, but from 2016, it's had a nice gradual increase and a huge jump from 2018 to 2019 there. So some of Duck Creek's larger clients include Progressive, Liberty Mutual, AIG, The Hartford, Berkshire Hathaway, Geico, and then Munich Specialty Insurance. And I did mention earlier, though, that just because they have these clients, it doesn't mean they have the entire stack of software. So they might only have one piece, and then other companies like a Guidewire or what have you might have other pieces of their pie. Major competitors, this is why I have the asterisk on Lemonade, because Lemonade is actually an insurance provider more than anything, and they do right now renters insurance. I have a video on Lemonade if you want to check it out on my channel, but Lemonade uses AI, artificial intelligence, and chatbots, and they go after younger type people. Generally speaking, they're going for the younger generations and trying to get them to sign up for renters insurance, and they want to scale and eventually offer auto and home insurance as well. So this is a very, very different company because these guys are not making software as a service for other insurance companies. They're more to me as an insurance company that's actually, using the Insurtech, the technology to sell insurance and the artificial intelligence to make their own claims. So they do some of their own claims and things like that, which is why they fall in the category, but note that it's very, very different from, say, a Guidewire. Guidewire is going to be the primary competitor to Duck Creek Technologies, and you can see some other ones on your screen: Insurity, Majesco, Sapiens, etc. Some of those are international companies, but their number one competitor by far is going to be Guidewire. Guidewire's roughly a $9 billion market cap company, and I'll get to the market cap for Duck Creek here in a second so you can see, but Guidewire is about 3 times the size currently of Duck Creek Technologies. They've been around for a while. So as of May 31st, 2020, Duck Creek had $19.2 million in cash and $100 million in total liabilities. Their free cash flow during the 12 months ended May 31st, again, 2020, was $18.7 million. And they're seeking to go public to do an IPO, to pay off some specific obligations they have that they want to take care of. And as I mentioned earlier, they want to provide most of these proceeds from the IPO for future expansion, for growth. Now, certain entities reportedly have indicated an interest to purchase shares of up to $100 million at the IPO price. And the IPO price, actually has changed, and I'm going to explain in a second. Usually strong investor interest in the IPO is a positive signal to potential IPO investors, but asterisks. Hold on, stay tuned. So here are my thoughts really quick. I'm going to show you another screen of what I'm talking about because there's a change today on the IPO. And then after this, I'm going to give you my closing thoughts. So this is my pre-closing thoughts. So there's a large market opportunity with healthy growth through 2025 as demonstrated on the earlier chart. When using the original IPO valuations, it was comparatively priced to its largest competitor, Guidewire, when you look at basically the valuation and you look at earnings metrics and things like that. However, hold on, because I'm going to show you a change. DCT seems to be positioned well, but stay tuned. Accelerating growth, positive operational cash flow, strong interest from investors, and reasonable IPO price means it could be a very attractive IPO to dip your toe into, to maybe buy some shares for your portfolio. But as of today, so August 12th, this morning, Duck Creek expected IPO pricing increases, raising potential valuation to $3.2 billion. So Duck Creek Technologies DCT, again, is the ticker, disclosed today, Wednesday. The expected range of the pricing of the IPO was going to increase from 19 to 21 originally to 23 to 25. That's a game changer. I mean, from $19 on the low end to $25 on the high end, that's a big swing. Boston-based provider of software as a service for the property and casualty insurance industry is offering 15 million shares in the IPO. The amount the company could raise has increased to up to $375 million from $315 million, so they increased it by $60 million. And its expected market value has now increased to $3.21 billion from $269 billion. Goldman Sachs, JP Morgan, and Bank of America Securities are among the lead underwriters. For the 9 months ended May 31st, 2020, the company recorded a net loss of $8.5 million on total revenue of $153.35 million after a loss of $14.1 million on revenue of $123.35 million in the same period a year ago. The company is looking to go public at a time that the Renaissance IPO ETF, I have a video on that as well if you want to take a look at it, has rallied 28.3% over the past 3 months, while the S&P is only up 1.92%. So you can hate on the Renaissance IPO ETF all you want, but it is up 28.3% versus the S&P at 1.29% in the same period. All right, so what are my thoughts? Am I going to buy this IPO? I will say this, I don't actually have an answer for you yet because things could change between now and Friday. I do like the opportunity for the company. It's not something that, that screams to me as a great buy if it's going to open up between $23 and $25. The original IPO price, if I could have got it around 19, I think it would have been fairly attractive. I thought that was a decent valuation for it. But when you're talking about a company that's bringing in, $153 million, $153 million in revenue, and it's losing money, and you're talking about a $3.2 billion valuation, that's pretty rich. And not that a lot of other companies aren't doing the same thing, but it's going to take some time to grow into that. So more than likely what I'm going to do is I'll probably, maybe be a little bit more conservative. I always dollar cost average. If I decide I'm going to buy some of this DCT stock, I'd probably do 1/5 and wait because I think there's a chance it could pull back. But with that said, guys, here's the thing. It's in the SaaS world, and IPOs have been going nuts in the SaaS world. There's also a lot of, I think personally, a lot of misunderstanding of what these guys really do. If the Robinhood traders, and I love you guys to death. I mean, you guys have given free trades to everybody, but if the Robinhood traders get on board on something like this, like Lemonade, and it doesn't have a crazy high float, I mean, this stock could rocket up easily. So you could open up at 25, or you could open up at 25, but retail investors might not get into it till 30. That could happen. With that said, it doesn't necessarily mean it's the smartest long-term investment if you think it's only worth $19 a share. So it depends on, do your research and decide if you want to pay a premium, if you want to pay up on the stock price because you think that the company has extreme growth in front of it. You kind of saw what the total addressable market is. You saw the 10.8% CAGR, growth rate. So you have to kind of make that decision on your own. Now, if you ever want to follow what I'm buying and selling, and if you want additional content, you like what I do, you can go to Patreon. Just Google Fired Up Wealth plus Patreon, and you'll find it. But we have different tiers in there, and there's different levels of support. The third highest tier, not the highest tier, but the third highest tier and the highest tier, those two higher tiers, they do actually show you what I'm buying and selling my portfolio. It's meant to be education, so you can see what an investor like me that's invested for 20 years is doing on a day-to-day basis. But sometimes it can give you ideas of, when I'm entering a stock, and maybe even uncover some stock picks that you might not have ever heard before. For example, Duck Creek Technologies. I'm guessing a lot of people have never heard of this company prior to this video. Maybe you have, maybe you haven't, but check that out if you're interested. It's just an optional thing. We also have a free Facebook group. I still do the videos on YouTube that you can check out anytime. So please do subscribe. Subscribe to YouTube. Click the little button on the bottom right. Click the little bell to get notifications. And then stop by that Facebook group. And if you have interest, stop by the Patreon group as well. Also have a website. It says firedupwealth.com. I'm really here to try to help people save money, save early, beat the market, and hopefully retire at a young age. And I've been investing for over 20 years and have a lot of money in the stock market and share my experiences with you. So if you like the video, please hit the like button as well. It really helps me out with the algorithm. And drop a comment below any questions you have, or just a comment to give a shout out and say hello, whatever. So I try to respond to every single comment everywhere, including YouTube, including Facebook, all over the place. So I try to be busy, try to keep as much information to you guys as I possibly can, and hopefully that's valuable to you. So thanks for watching. Have a great rest of your day. Take care.